All right, so I'm here with Dharam Taylor with Mortgage Architects. We're going to talk about how much income you need to buy a $400,000, a $500,000, all the way up to $900,000 home in Canada. So Dharam, how do we jump into this?
Thank you for the introduction, Trevor. I appreciate it. So based on average debt levels here in Canada, we've got approximation of between $400,000 for a purchase price all the way to $900,000, the minimum down, and what the mortgage payments would look like on current interest rates and what the household...
Because that can always change, yeah. So
Yeah.
Depending on when you're watching this video, if interest rates go up or down, it's going to jimmy these numbers a little bit, but this can give you a rough idea.
Exactly. And so based on that, we're showing you what the required household income would be. So based on a purchase price of $400,000, we'd be looking at a minimum down of $20,000 and the mortgage payment would be just above $2,000 with the required household income for approximately $108,000. For $500,000 purchase price, the minimum down would be $25,000 and the mortgage payment would be approximately $2,500. And the household income would be $122,000. Now, for $600,000, the minimum down does change slightly because we're able to do 5% on the first $500,000, and anything above that amount would then be 10%.
So I forget about that rule sometimes. So that threshold is the $500,000?
Exactly.
Okay.
So then that would then mean the minimum down for $600,000 would be $35,000 with a mortgage payment of approximately $3,000 with a household income of $135,000.
I have a question about that. So when you guys are looking at household income, does it matter whether it's coming from one person or two people? Like does the bank treat it differently or the lender treat it differently if, let's say, you got two people making $60K each or one person making $120K each? Like, are you penalized more one way or the other, or is it?
No, you won't be penalized more. So husband and wife making a household income of, let's say, $135,000 would be able to qualify for a purchase price of $600,000.
Okay.
So you won't be penalized because it would be very rare to be on the same amount for each borrower for the husband and wife, but no, you would be penalized one way or the other.
Yeah, I was just kind of thinking about like tax, you know how tax rates could like one person making 120 is going to get taxed more than two people making 60. So I wasn't sure if like the bank actually cared about that, but they're just looking at the gross numbers still.
They're looking at the gross numbers, but what does matter is the debt load between the two as well. So that could significantly impact the amount for qualification.
Okay, yeah, so let's get into that. I think you'd already said that you're assuming like $1,200 a month, like average debt load. Can you explain what you mean by that exactly?
Yeah, so average debt load, we're including things like a car payment, credit cards, is something that would be considered.
Student loans?
Student loans, yeah.
Okay, so that's like on average. So correct me if I'm wrong, but if somebody's got a car payment that's $600 and then between student loans and their minimum credit card payment, they got another $600, they would fit that average?
Yeah, exactly.
Okay.
But it depends on whether the student loans are in repayment because we do calculate them slightly differently as well.
Okay.
Yeah, so we could be, it could be 1% of the loan or it could be whatever the monthly payment is. So depending on if those student loans are within the, are being repaid or not.
Okay, so if they're in the phase of being repaid, I would assume that hurts their debt load more, right?
Yeah.
Okay.
Yeah.
Okay, yeah, that makes sense. So if someone has, like if you're watching this and you've got less than that, you don't have a car payment or you don't have any credit card debt, then the numbers that he's sharing right now would actually look a little bit better for you. You'd be able to qualify for more, but we have to use something when we're making a video. So,
yes, that's right.
So going with the averages kind of fits.
We're using like average non-mortgage debt payment of $1,000 to $1,300 per Canadian household.
Okay.
Yeah.
All right, so did you finish going through the chart or did I interrupt you too early?
No, all good. So for $700,000 for a property purchase price, where minimum down would be $45,000 and the monthly mortgage payment would be approximately $3,500 and a required household income for $148,000.
Okay.
For $800,000 purchase price, we're looking at a minimum down of $55,000 and the mortgage payment would be just above $4,000 with a household income of $161,000. And for $900,000 purchase price, we're looking at a minimum down of $65,000 with a mortgage payment of $4,400 and a household income of $174,000.
Okay. And now just to talk about the assumptions a little bit more, that I'm assuming that's based on a 25-year amortization.
Yes.
And what interest rates are you using for that right now?
Yeah, so this is a really good point, because if you are a first-time home buyer, we can extend that amortization to 30 years. So again, the affordability, your purchasing power would increase, the affordability would increase. Also, if it's a brand new build, we are able to extend the amortization to 30 years as well. So
okay.
yeah, you can do that. So those are the two factors. And sorry, Trevor, what was the other thing that you said?
The current interest rate.
The current interest rate. So I'm just using an interest rate right now of 4.19%. It is also important to remember that there is a stress test involved. So it's great that it's at 4.19%. If this was pre-2017, that's exactly what you'd qualify for. But we actually have to do the stress test, so it's 2 points higher, so it'd be 6.19.
Okay, so all these calculations that you just shared are basically assuming a 6.19%.
That's correct.
Yeah, so if you're watching this and the interest rate that you're getting offered right now is 3.5, then you'll be able to qualify for more, even though that'll still be stress tested at 5.5. But if it's the opposite and interest rates are actually higher when you're watching this, then that would also cause the numbers to drop instead.
Exactly.
It was interesting what you said about the amortization options. I actually wasn't familiar with those.
Yeah.
So you said if it's a first-time home buyer, so is that like the same qualifications as someone that's using like either 5% down or the first-time home buyer plan kind of thing? If they've hit that criteria, then they can qualify for 30-year amortization?
Yes.
And what was the other one?
And so if it's a brand new build, so no one's ever lived there, then we can increase the amortization to 30 years as well.
Regardless of whether they're a first-time home buyer or not.
That's correct.
Okay, so if you're buying a house like this Sterling show home we're in right now, then you could you could use that even if it's not your first home. Okay, so that's actually really interesting. That's good to know. So what's next? Do you have another number to go through, or did we finish going through your 900 number?
So let's have a look. So assumptions for debt, taxes, and utilities. Average non-mortgage debt payment is $1,000 to $1,300, which we've covered. For conservatism, I've used $1,200 additional debt payment. Property taxes, using Edmonton as a reference since city context seems relevant, $394. So that could also change in terms of qualification depending on where what those taxes are.
So are you just using like a percentage based on what like Edmonton's mill rate is? Yeah, essentially.
Exactly.
Okay. Yeah. So that should work most of the time, but as everyone probably knows, sometimes the tax assessed value on a property is off. So if you're buying a $600,000 property, but for some reason the city tax assessed it at $700K, then your property tax number is going to be higher, which could end up affecting the qualification. Am I understanding that correct?
That's correct.
Yeah. Exactly. Or if you're buying outside of Edmonton, like if you're buying in Parkland County or Spruce Grove, they have lower property taxes there. So that can also affect the numbers a little bit.
Totally. And as the professional realtor here, am I right in thinking as well Sherwood Park has lower taxes? Because
I've heard that. I find so few people end up being happy with the prices in Sherwood Park that that's usually the thing that moves them first. But I have heard that the property taxes are lower there. I'd actually have to look. Yeah, yeah. It was this guy right here who set me up. Yeah, if anywhere it's lower, it's going to make a bit of a difference, but not massive, I wouldn't think. But if it's an extra $200 a month or something like that in one place versus the other, then you will notice that. Yeah. On your debt service as well as your monthly payment.
Yeah. So to get an idea, feel free to reach out and we can look at the numbers in depth. Alternatively, what you could do is you could use my mortgage calculator app to get yourself pre-qualified within minutes. Very simple, very easy to use. And it gives you an idea of where you stand in terms of qualification, even before you wanted to speak to myself or another mortgage broker. You're able to use that app and it's going to be able to give you an idea of what your qualification will be.
And if somebody wanted to get in touch with you so they could discuss their situation, maybe put in an application or even just have a casual phone call, kind of find out where they're at, ask you some questions, what would be the best way for them to reach out to you?
Feel free to reach out to me on my direct telephone number, 780-278-0674. You can email me too at daram@taylormtg.ca. And that's the best ways to get in touch with me.
Awesome. Well, thanks so much, Dharam, for going through this with me. I'm sure there's lots of other questions that people will have. So if there's anything that you think we missed, or if you want to ask Dharam a question and you're too scared to give him a call, leave us a comment and maybe we can get him to reply that way too. All right, we'll see you guys on the next one.